be looking at what is probably the most it's not exactly exciting lah, most eventful year that we had in a long time with COVID-19 affecting us very largely for the most part of 2020. And then let's look at what's in store for us for next year and what are the opportunities that we see. Okay, so we actually did 3 videos after the end of the circuit breaker to predict what was going to happen in the market. And basically, as we said, in our 3-part series about the Singapore property market post COVID-19, which we will be sharing in the links in the comment section. Yeah, we saw that, we talked about it, that we expected the property market to be stable and the prices not to really drop. And yeah, let's see how our predictions turned out to be for the year.
Okay, so this is the URA private property price index, right? Basically what everybody looks at to see where how the property prices are going. Okay, so through this most eventful year, right, the property price compare year to date comparing with Q4 2019 is only up 0.1%. I guess the fact that it's even up comes as a surprise to everybody lah. Okay.
Yeah, so 2020 has been probably a really bad year for everyone. No traveling for some of us. Jobs were also very uncertain, but the fact is that the private property prices remain more or less unchanged, and we have explained that previously in our videos. So for the benefit of those of you who are joining us for the first time, these are our 3 reasons why didn't the property prices drop despite the huge factor of COVID-19. So first thing is, our cooling measures that the government has put in place since 2013. This has effectively stripped out all the speculation that we have in the market, allowing our Singapore property market to enter this crisis on a more stable footing. And compared to the other crises where we see very huge dips and very fast increases. So second point is on the massive stimulus from the government. The government has spent actually close to 100 billion in this crisis with the main goal of saving jobs. And when you have jobs saved, then people are not so pressured to sell their homes. And coupled with the cooling measures which remove speculation, the property market has become largely owner-occupied driven, and when unemployment is averted, then the number of people having to put up their property for sale has dropped significantly compared to the previous crises. And for the last one is the unprecedented mortgage holiday that was implemented by MAS. So this is a third layer of protection that granted anyone, whether or not you're affected negatively from COVID-19, to have a break from paying your mortgages at no additional cost, no additional interest. This is basically to prevent any knee-jerk reaction or panic selling in the event someone loses their job. And with the already very low interest rates and this will ensure that once that the mortgage holiday is over and mortgage repayments continue to be affordable for households. So a very quick explanation on why the property market didn't tank as what we expected because of COVID-19.
Next, right, we look at the breakdown of the property price index by market segments. So our CCR, RCR, and OCR. Right? But before we dive into them, right, we also want to talk a little bit about the property price index as a whole. So a lot of people focus a lot on property price index, okay? But generally, the property price index is retrospective. So it looks back, 3 months in order to derive what we have over here lah. So a general word of advice that we have for everyone is that do not base your property decision solely on the property price index. Take it as something that's more general, right? And something that will help you understand what is happening in the past rather than using it to forecast what will happen into the future, right? For how to use it to forecast the future or what to use to forecast the future, later on we'll share more with you guys, okay? So over here, right, you will see that the CCR has dropped, right, by 3.4% year to date compared to Q4 2019. RCR relatively unchanged at 0.26%, and the OCR up 1.4%. Pardon us for the very small font for landed at the bottom right. For those of you who can see, okay, most of you cannot see lah. Let me read it out to you.
I think can see lah if you look a bit close.
Okay, y'all look very hard on the bottom right. It landed is up 2.8% year to date. So it's the best performing market segment for the year. Okay. So by then, right, when we look at the negative 3.4% for the CCR, okay, it does not mean that the CCR owners are selling at huge losses. No, they are just selling it. What this means is they are selling it at a slightly lower price compared to their neighbors, right, or their peers who have sold it last quarter. Okay, but it's still probably at huge profits, and it's because the wealthy have multiple properties, and in crises like that they tend to restructure their portfolios to get cash in order to pick up opportunities that may arise. Okay, so similar reasons why you see a lot of shop houses coming up for sale in this period. Okay, so we will discuss this data in greater detail later, right? How to make sense of them and where are the opportunities that lie in the different segments. In the meantime, right, for all of you who listening can take note, right, and then share with us how do you interpret this data.
Yeah, so we move on to HDB, and I think this is happy news for HDB. We are up 1.8% compared to Q4 in 2019, and this is a really welcome change for HDB owners, because the HDB market has been performing pretty badly, not so ideal, where we see prices generally falling for HDB in the last couple of years. And where do we expect this to go? We will also discuss this later on. So again, which one of you guys think HDB will continue to go up or continue to go down? Okay, and on to the next point, which would be on the volume of transactions. So volume is another indicator that we like to use to understand what is happening, and very much like shares, for property, volume also drives prices. So you can see from this chart, the bar chart is the volume and the blue line is the average PSF. So this is a little bit different from the property index chart, because this one is tracking PSF rather than the property price index. So you notice that when volumes go up, prices also go up, and during the immediate period after the cooling measure, which is post 2013, you realize that volume was pretty low and hence the prices didn't really move. It was only when volume picked up in 2018, 2017, and then we started to see the prices inching upwards.
Okay, note that this graph, right, it looks a little bit different. The blue line looks a little bit different from the property price index, okay, because this shows average PSF. Okay, so while the property price index, right, was pretty flat from 2018 to 2020, you can see that average per square feet actually picked up. Okay, and we prefer to use the average PSF graph, right? Because it's easy to understand. How do you get the average PSF graph? Basically, you consolidate all the transactions in Singapore and then you average it out, right? Very simple, correct? But does any one of you here, right, understand how to derive the property price index, the URA private property price index? Okay, they utilize this thing here, right, called the stratified hedonic regression model, factoring in all the functions over here, tenure, completion status. Basically, it's super cheap, and we have asked like actual real estate graduates that have not heard about this before, right? So we are all laymen, so we prefer to use data that you can understand easily, right? But again, volume is retrospective, much like property price index, right? And it can be very easily skewed with hot selling launches. So for example, Clever with its 400 plus launches, 400 plus units sold, it creates an artificial spike in volume, which we will be able to see when come early next year when they look back at the sales volumes in December. So conclusion, volume is perhaps more useful, more reflective than price index in our opinion, because at least it shows underlying demand, but it still doesn't help you forecast the future.
Okay, so not that it's not good or what. When we were researching on our topic about volume, we spotted this interesting opportunity. So if you follow me, in September 2020, URA actually clamped down on the reissue of options to purchase for private homes, and it took place immediately. We have covered this in our previous sessions before. While it did have some effect on the overall volumes, you can actually see from the Clavon and the Link launches just how much funds, how much firepower the Singaporeans or the long-term residents in Singapore have. So you see Clavon over last weekend where they sold 442 units on launch day, the Link selling 96% of the units on launch day, and we have to take note, right, that these two developments have quite a number of purchases where the purchase price is actually above 2 million. So these buyers, right, who actually bought these units have either sold their property and are camping to buy, maybe they are renting elsewhere, or which is really quite rare, or if not, right, they would have been sitting on a lot of cash to either buy under trust or to pay the ABSD first and then claim it back later. So Singaporeans really a lot of cash in the bank.
So that aside, right, here's the opportunity. Okay, so this is the Clavon's elevation chart after the sales weekend, right? So what do you notice? Okay, notice the units that remain unsold. And it is very similar. We're just using Clavon as an example, but if you look at Penrose as well, right, it is very similar. Okay, right? Yeah, they are the large units that remain unsold. Right, so we want to ask ourselves why do they remain unsold? Okay, it's because understand who are the buyers of these large units. Okay, they are most likely upgraders, multi-generation families, big families, okay, that may find it hard to sell first, then go out and rent while waiting for these developments to be built, right? Then on top of that, now without reissue of option, they really have to sell their place first before even buying. So what is going to happen, right, for these new developments, right, and for those of the upgraders and these multi-gen families that still like new developments, they have no choice. They have to wait until these developments near TOP before selling and then buying into them. So what that's going to do is push the demand for these large units very close towards TOP or after TOP.
And then what happens then, right? So we look at this example of Grandeur Park, 5-bedroom. Okay, so look at unit 0826, which bought nearer to launch in 2017 June. Okay, you see the per square feet that owner paid for is at 1,264 PSF. So in 2017, that is really not cheap for Tanah Merah, especially when this is a 5-bedroom and your 5-bedroom tend to have lower PSF. But see what else happened. Okay, earlier this year, recently, because Grandeur Park is going to be TOPing soon, level 9 was sold at 1,500 plus PSF, and level 7 in July was also sold at 1,500 PSF. So Level 8 owner is sitting on huge profit of about 360,000. And if you calculate the down payment that he has put in, right, and the stamp duties for the unit that he bought at 1.8 M in 2017 is about 417,000. The return on capital is a really good 21% per annum, and this is assuming that he only sells next year in June 2021, which we count in 4 years. So it's really good returns.
Okay, so this is another good example, right? Because a lot of people are thinking, especially with the fact that there's no more reissue of options, right? Whether or not is it worthwhile to sell first, buy, and then go out and rent. So let's take a look at it, right? So 3.5 years, right, since launch day of Grandeur Park, okay, to when it's expected to TOP. It's going to TOP anytime now. So 12 months. Per month rental about 4,500. We use 4,500 because you can get a really nice terrace house with 5 bedrooms at about $4,500. So that will work out to be about $189,000 over 3.5 years. You take this $189,000 minus off that paper profit, right, of close to 300 over 1,000, 360,000.
Yeah.
You still have a net profit of 174,000. But that being said, we have to caveat this will not happen to all developments. Okay, you have to analyze it properly, right, to understand whether or not there are such demand for such large units, right, come TOP or in the area. And more importantly, the timing is very important, which we will touch on a little bit more later.
So in our opinion, the better or the best data that we like to use is data that is forward-looking versus retrospective data, which is what we have been seeing for the property price index or the volumes chart. We like to look at things that cannot change. So what are these things that cannot change? So we when using things that cannot change, it will then be easier to predict what is going to happen. So for example, while demand can disappear overnight, right, supply cannot appear overnight. I repeat, demand can disappear overnight, but supply cannot appear overnight. So for example, demand can easily disappear overnight when there is a cooling measure, or for example, the circuit breaker that happened.
Okay, but if you so if you launch a piece of land today, right, supply will only come online 3 to 4 years from now, right? And thanks to COVID, HDB in the recent exercises, right, they are expecting to TOP hand over keys in 2026. That's 6 years from today. So this is the beauty of real estate housing supply, right? It is very easy to predict. And for Singapore's case, right, the land sales supply and on-block supply has been very low ever since the property cooling measures in 2018. So, right, with 2 years of low land sales would lead to 2 years of undersupply of TOP units when? Okay, repeat again, right? So for those of you who are listening, right, make a guess. This one very important. If you can guess this, it will help you a lot in understanding the market. Okay, 2 years of low land sales between 2018 and 2020 will result in an undersupply of TOP units when? Okay.
So you can see we like to use the supply chart, and this is probably one of our favorite or more important charts that we've been using quite recently if you've been following our Facebook Live. Why? It's because it really draws a relation between the supply and of units and the property prices.
So for the benefit of those of you who are joining us for the first time, the orange color line is the property price index. Okay, the blue line is the basically unsold developer supply. Okay, so if you follow me, right, the previous upturn in 2017 in prices, the previous upturn in the 2017 prices was preceded by unsold developer stock and units, right, plunging below this line, this arbitrary line of 20,000. Okay, so when the developer stock dip below this 20,000 line, right, dip below this arbitrary line, they have to come back into the market to bid for land, right, to continue doing their business. Okay, so and when they come into the market to bid for land, they will bid for land at increasingly high prices, because who do they buy the land from? They buy the land from the government, number one, okay, and the government sets a reserve price for all land sold, and that reserve price continues to go up. Either that or they go en bloc, and en bloc sellers today, if you are en bloc seller yourself, you will not charge the developers cheap. So that is one of the reasons why when they come back online, right, to bid for land, it will always be at a higher and higher price. Okay, so and that will result in a lagged increase in property price. Okay, so when they came online early in 2016, 2017, that led to a upsurge in price 2017, 2018. And then two things will happen. Okay, people realize how expensive the new properties will be, and then they rush to buy the existing properties. So then the sellers of those units, right, either the sellers in the resale market or the developers see this surge, then they adjust, they move their goalposts and adjust their prices up.
They become greedy.
They become greedy, right? Number two, then the developers, the new land that the developers buy, they buy at an expensive price, so then they have to launch at another expensive price, and then people all start to go all FOMO, right? Because once they see the trend of the prices moving up, they will hurry up rush to buy, because if they don't buy now, the next one that come up will definitely be more expensive. Okay, and this has been the case for many cycles. It's not new, not just the last cycle, it had happened for all the previous cycles.
Okay, so we can see that the government is still taking a very cautious approach to this. They are still not releasing a lot of land for sale, probably because of the economic climate, but because of that, we are guessing that en bloc could start again next year, and it's basically what this article is saying, and what a lot of our friends in the real estate market are believing that will happen next year. So how to use the supply chart? You remember our example on Grandeur Park, right, on how that owner on the 8th floor made about 300 plus K, and remember us saying that the demand for these large units will be pushed closer to TOP. So we look at how to use this information.
Okay, so we are adding one more layer to that one more layer of data to that prediction we put out earlier. Okay, so what this table is showing is the number of TOP units between 2016 and 2020, right? This data is from URA, we picked it up.
As of Q4 2015.
So you notice 2020 very little TOP as compared to the previous year, right? It's only 10% of the numbers in 2016, 20,000, right? It's 2,100. So this is an excellent example of how to use the supply chart. Okay, so for upgraders who are looking for a new place and they want to reduce the need for renovation in 2020, they really have not much choices. So because they don't have much choices, they are willing to pay that premium. Remember that chart, the 7th floor unit and the 9th floor unit paying a good $300,000 to $400,000 more than the 8th floor unit that bought at launch. So, and that's not the best part. Okay, so now I'm going to share with you the opportunity, because that's the past already. So moving forward, what's the opportunity? But before we jump to that, this table is an extension of that previous slide, okay, to break down into the market segments. Okay, so out of that overall supply, right, between 2016 and 2020, 9% went to the CCR, 31% went to the RCR, and 60% went to the OCR. This breakdown looks about right, okay, because most of us, right, and most of the HDBs are located in the OCR. Okay, but then let's see the next slide.
And especially our BTO upgraders.
Yep.
Yeah, mostly in the OCR.
So this is the data for 2020 to 2024 as of second quarter 2020. Okay, you can see that the breakdown now stands at 19% for the CCR, 42% for the RCR, and only 39% for the OCR. And that doesn't look quite right to us because the OCR is the biggest landmass in Singapore, also housing the most number of people, but the amount of TOP units catering to all that demand is only 39%. Okay, so here's how we piece everything together. Okay, the first one, right? No more reissue of OTP, right? Hence pushing the demand of large units back to during the TOP, close to the TOP of those developments, right? Then add on that layer, right, of the past few slides what we were sharing about the undersupply of new developments in the OCR will funnel all that demand into either the resale market or the balance developer units near TOP. Okay, and right, you look at this flow, where do you think the prices are headed for such units?
Okay, so on the demand side, provided that everything stays the same, hopefully they stay the same. This is what will look like for the developers as their unsold inventory comes down, they will move back into the market. So in the last market upturn in 2017-2018, you realize that these are the various launches, government land sales during that period of time, and we want you to take a look at the number of bids made by various developers for the various land sales. So you see them ranging from 9 bids to about high of 24, averaging maybe around about 15-14 bids. And then remember what happened to the Tanah Merah Kecil site, where it was launched earlier this year with 15 tenderers, which is very similar to what we see in 2017. So we really predict that we are moving into the cycle that we saw in 2017, and we will experience the similar bull run that we experienced in 2017-2018.
Okay, so on the other type of demand, so the previous slide was on demand from developers, okay, that will not change because we can tell that their unsold inventory is coming down. So what is another type of demand that is unlikely to change, okay, would be the demand for HDB upgraders for private properties. So why do we say so? Okay, we've shared with you several tables. So the most extreme left one was a table of the breakdown of units based on area in 2020, this year, right? So we see about 14,000 of them coming MOP, right? In 2016, right, we expect 21,000, so 7,000 more, and in 2022 26,000. So this is a huge number of HDBs coming to MOP, right? Huge number of people looking to upgrade, because a real good amount of people tend to think about the upgrade when their HDB hits the MOP, right? So the delay, right, in BTO building, right, is increasing the demand for such resale HDBs. Okay, so in normal years, right, without COVID-19, this amount of supply can be quite worrying for HDB upgraders, right, as they form a lot of competition in the resale market. But we see, and I think you all can speak to a lot of your agent friends or people who are agents, right? We can see how fast that supply is being absorbed up by the market due to this delay. So on to the next slide, right? And this is, we thought something that we could share with you guys, because you don't see all this on the newspapers, right? Because these are something that we feel on the ground by speaking to buyers, sellers, day in, day out. Okay, so COVID-19 have changed us one way or another. In this slide, right, we want to show you what are some of the changing preferences of people in the market, sellers, buyers. Okay, so the first point not really a change in preference, but more of an observation between us lah. And this one is perhaps a little bit sensitive, but we spoke to a lot of people to verify this, right? While COVID-19 has hit some industries very hard, right? But a lot of jobs and a lot of industries came out relatively unscathed lah. And from our observations, there have been quite a number of people that actually made money through equities, right? Buying in at the low earlier this year, and then the market has came up quite a bit. So we've been getting quite a number of calls from clients who want to utilize their profits to look for larger units lah.
So moving on to the second point on larger units, I think this one is quite self-explanatory lah. With everyone having to stay home during the circuit breaker, I think people are starting to find that they would prefer their own space, and especially having to find arrangements to work from home. You realize that as a couple, being in a one bedroom just simply doesn't work, because there are two people and you both need your own space to work, right? You need your own table and your workstation. So people are starting to look for more spacious and larger houses.
Then on to the third point, right? With most organizations coming out to say that they will keep this work from home arrangement in some form or another even after COVID-19. So which means a lot of people will not have to commute to office as much anymore, right? So with that, right, we don't see from especially from those people that we speak to lah, they tell us that they don't need to stay so near office anymore, as they work more often from home. So as opposed to paying for a location that is closer to office, perhaps in the city fringe, they rather spend that money to buy a larger house that is perhaps slightly further away lah, right? So let us know your thoughts. Kit, if you are still here, let us know your thoughts how COVID-19 has changed your preference on property.
Okay, so what do we expect in 2021? Interest rates probably should be remaining low. The central banks are all saying that they will keep interest rates low. So if you're still out there waiting for fire sales to happen, I'm not sure if they'll come lah, okay? Lower quantum units in the new launches are kind of more or less sold out. You can see that anything under 1.2 million are really quickly snapped up on the first day of launch. You see that in Penrose, you also see that in Claiborne. Okay, and so if you have a 1.2 million budget about there, right, there's actually nothing much to look at already. We would encourage you to take action soon, because when we talk about it in our next slide, you might be a little concerned. Okay, there are also lesser choices in the new launches, and demand will inevitably flow into the resale market next year. So we expect the resale demand to pick up quite significantly next year.
So the next slide, right, is talking about the dreaded cooling measure. Okay, so we've said this before, and we are putting it out there again. As much as we hope it doesn't happen, but we are putting it out first, right? Our predictions. How we foresee when that there is a chance that cooling measures will come out next year is by comparing it to certain points that happened in 2017, 2018 that led up to the implementation of the cooling measures, right? Number one, quantitative easing by the major banks, right? So your US Fed, your Bank of England, right, China,
Singapore.
Bank of Japan,
Yeah.
Singapore, every country is printing money. Okay, the lack of land supply, right, it is happening, right, both times. Developers coming back onto the market, right? You've seen the chart that we showed you in 2017, 2018. For 2020, 2021, we are just seeing the start of it, but it is happening. Strong launch day sales, Okay, so 2017, 2018, you remember the Twin View lah, 90% sold on launch day. So we are slightly aging towards that number, right? With, you know, Claiborne, the Link, Penrose, all averaging a good 60, 50, at least 50% sold, okay? The only thing that has not happened yet is a sharp increase in prices. And we put that down to the fact that the developers have not, right? There has not been any conclusion of a lot of land sales and en bloc sales for the market to see the price shooting up and for that laggard effect to happen.
So the FOMO mentality in buyers hasn't exactly come in yet
Yes.
for this period of time compared to in 2017 and 2018 where everyone seems to be in a rush to go into the property market.
Right, so if next year you start to see quarter on quarter property price moving up 2 to 3%, 2 to 3%, then everybody buckle up for a new round of cooling measures. So what would likely be the cooling measures? Okay, so this is both our thoughts lah. As much as it used to be every time they'll just keep increasing ABSD. ABSD is already at 12%. Increasing it to 15%, we feel that there will be a marginal effect on the market. So what they may change, and this is something that I think a lot of real estate experts have already came out to say, but they say more so for the premium HDBs that they may either lower LTV. For the premium HDBs, what they're suggesting is maybe lowering the tenure lah, but we don't see this quite happening for the private market. Mainly lowering the LTV, so it's now at 75%. You may see it come down 70%. So what that means is that, you know, you would have to put in more down payment to purchase a house lah.
Your budget will then inevitably become smaller because of the larger down payment that you have to put. Yeah. So what are the opportunities that we see in 2021? First thing definitely is the landed housing. The landed housing in this whole year performed the best, as what we said earlier in the slides just now. Especially those under 3 million, right? We feel these will probably experience the largest price increase next year, because we see that a lot of the large condo units are already approaching this price of 3 million. You can see in the chart, right, that the landed prices tend to go up higher than the non-landed property prices in the private market, and it's simple economics because there are simply no new supply for landed housing in Singapore. Okay, and as the large condo units become more and more expensive, with your 99-year condo units, 5-bedroom already reaching 2.5 M or even higher for some others, it's definitely going to channel some demand into the landed market.
Right, but because the quantums are already so large, right, there will still be families that find it hard to jump to landed property due to budget constraints. So that's why we pointed out earlier, right, the opportunity of larger condo units moving in the remaining launches. Which brings us to one of our last slides, right, which are what are some of the projects that we are looking forward to next year. So you can tell from the video that we just did, the Rise Residences integrated development at Pasir Ris, because of its comparatively low land price, right? And we are saying comparatively low is because it's a good can you remember how many percent? I think it was about 20 to 40% lower than the Woodley Residences and Sengkang Grand, right? So really worth considering, worth keeping a lookout for. The second one will be Normanton Park, which should be releasing anytime soon, right? We are getting briefed on Normanton Park already.
So anyone interested, do reach out to us. Yeah.
We are hoping to put out a video review for Normanton Park soon. Hopefully we are able to do it by next week. Right. So Normanton Park will be the last of the large mega developments that we will be seeing already. Moving forward, very, very hard to see such large developments anymore. Okay. Yeah. So last slide, one of the last slide okay, so don't worry if you cannot see. Drop us a message. We'll text this to you, or drop us a comment and we'll text this to you. These are the launches that will be happening next year. But what is interesting to note that in this table there is about 19 launches, okay, out of which 10 of them are in the CCR, 3 in the RCR, and only 6 in the OCR. So again, it is reflective of, remember that supply chart that we showed you earlier, how we
There's
feel
an imbalance.
that the percentage distribution in TOP supply, it's not very balanced.
Yeah. So this is more or less what we have prepared for everyone today. Hopefully, you know, our predictions for 2021, you know, are accurate. Yeah. So moving on to the Q&A session. If you guys got any questions, do let us know in the comment section and we'll try to address them. Kit was mentioning just now that the pandemic does not seem to have made a dent in the property market. Absolutely right. We were all expecting that to happen, especially during the circuit breaker. But I think what that happened was just a stop in volume. Volume just simply dried up. And then once phase 1 came, phase 2 came, and now we're moving on to phase 3 already, we just see the property market coming back stronger.
Kit also highlighted, right, as long as new HDB continue to be massively oversubscribed, the young will likely have to buy resale HDB. Correct. So because you want to ask people to wait, right? Somebody that is like 28, waiting to get married, have to wait 6 years to collect key, being weighed up. Of course, I mean, if they can build in 3 years, I think most people will choose a brand new BTO because they know confirm will make money lah. But now, given the choice of making money versus time and basically the golden time for kids, for marriage, everything, I think people are, and especially also because there's so many CPF grants to help people with resale HDBs, that people are choosing to go for resale HDBs lah.
Okay, so if there are no more questions, anyway, if you guys got questions,
just keep them coming in, okay?
Yeah, and we can reply them to you privately also. So before we go, we really like to thank everyone for your support this year. It's been nice to receive the comments that we've gotten from the Facebook Live, and that some of you have given us feedback that you find them informative and gives us conviction to carry on next year. Yeah.
So we'll be making some slight changes next year to better bring content to you guys, right? So while we will continue to put out content every 2 weeks,
to do
okay, but we'll be alternating between Facebook Live and pre-recorded videos, right? Videos like the one that you see like for the rise, okay? And this is because we realize it may be a bit hard for you guys to see the figures if we do Facebook Live lah.
Yeah, the charts and the information sometimes a little bit too small.
So we will use pre-recorded videos to better, to make that clearer for you guys and easier for you guys to see. And then every month we will still do Facebook Live, so to get to interact with our good friends like Kit. So to interact with you guys and for you guys to be able to put up questions to us directly. Okay. So with that,
thank you for joining us.
And thank you so much for the support this year. Elizabeth and I would like to wish everyone a very Merry Christmas
and Happy
New Year.
Yeah.
Stay safe. We'll be back next year.
Yeah.
Okay.
Hopefully we get the Normanton Park video out next week.
Yeah, so stay tuned. Alright. So thank you everybody. Bye-bye.
Bye.